Hello traders, welcome to FreeFX. My name is Francesco. This is my video to end the week. So today is Friday the 22nd of July, which has actually gone into midnight, so it's actually the 23rd. But let me start with a little introduction. So this is the price action today from the S&P 500. As you can see, we've had a bit of a downturn, which is kind of what I was expecting actually. So let's start with, first of all, it talks about the weekly before, how we had a sort of a triangle formation here, and that's kind of been broken to the upside. But we've got a couple of things going on here, so let me just kind of drag this, my face, out of the way. And what we have is a number of things. So if you look carefully underneath, or might actually take out, so that's my actual position at the moment. So I basically shorted here, and I'll show that maybe a bit later on, but essentially it's not that important. What's important is to show you what I'm actually doing, which is analyzing the trend. So you can see here it says weekly time frame 21 weighted moving average, and that's the blue line there. That's the weighted moving average, 21 periods. And so you'll see a wick coming up here that's kind of coincides with the WMA. Also, you'll see that there is a strong resistance there, and that's the kind of 4,000 level, more or less. So I've marked both of these, and you can see that we've had this resistance really come into play today, just at the end of the week actually. So if I break this down into time frames from the top down approach is really important. So we're going to do that, and the next one is the dailies. You can see on the daily we've had this turn on a CCI, and we sort of come off the highs there at 200, and on the Bollinger Band, the upper, we're coming off it, and again against that resistance, playing out nicely in our favor in terms of shorting. The other time frame I would look at, obviously, it's the 4 hour, which is used by now, and you can see that what I talked about before is perhaps not on the video per se, but on the on my Twitter account, is this negative divergence. So you see the negative divergence there. We have two things going on. First one, very important, is the CCI, and the second one is price. So on the price side, we've got the Bollinger Bands here shrinking. Price came down heavy here from that resistance, and but what was important was that divergence started about here, or maybe we could say from here, from the 18th of July, and then gradually we had another low, so a lower high, while price was rising. So we had 1, 2, and then a third starting yesterday, a third high, as the CCI did not agree with price. So essentially this was my divergence, and I started looking back actually all the way here, but then this was higher and this was lower, so that didn't really match. But this high on the CCI was followed by a lower high here, so the high on the 7th of July and a high on the 18th. Okay, they were different, whereas on price we had this price top being slightly lower than this one. So actually that's where the divergence started in a way, but it's really just this final push this week from price that did not sort of get the confirmation from the CCI. And indeed, so today what happened was extraordinary, because that divergence was honored and price did drop. So now they're in tandem. Now there's quite a long way to go. So on going back to the daily, this is the top of the band, so the bottom of the band will be here. So if I show you again where I'm at in terms of the trade and my orders as well, that will show you what my target is, and it's right down here on the bottom Bollinger Band. So my trailing stop is up here. Now next week obviously we've got the Fed rate decision, so that's going to be a big ticket. We've got other things as well, like the global growth expectations from the IMF and other such things. But and GDP numbers coming out as well. But I think the main ticket obviously going to be the Fed rate decision on Wednesday evening, 7:30 UK time. And until then, really, there's not much I can add to that, other than that this divergence played out today, and thinking perhaps that I may not do a video next week because I'm away from tomorrow for a week, so I might do a short update. But you find me on Twitter, so I might put some things on there. But I'll be away next week, so this will be my last video this week for sure. I might do something on Twitter, but it'll be more like tweets rather than actual video. So thanks very much. I hope you had a great trading week, and I hope next week is going to be an interesting one. Obviously, one thing I was going to mention was that potentially on the weekly, just to show you where my targets again are, that's my target on a weekly there, and that's kind of on these swing lows that you can see. It kind of matches that. Potentially on the weekly we could go all the way down to here, which would take us to 3,600 and something. My target is 3,741, but I could revise that, if price does not want to. On the upside, if we were to break past the WMA, we've got the simple moving average, and then we'd have to sort of break upward. We've not been above those two, or at least not the simple moving average, since back here in, just show you that, since back here, since we broke below it on the 17th of January. So essentially we've been in a downtrend 6 months exactly, almost to the day, and that means that to break above it, that something really strong would have to change, not just the Federal Reserve kind of announcements and rate decisions, but also I think something more profound, whether it's the attractiveness of risk capital being invested in equities or in an index like the S&P, or general sentiment would have to improve. And I don't think a single number like the rate decision being lower than expected or anything like that it will give it sort of a relief rally, but I'm not sure if that's enough. We've got lots of things coming up next week as well. I didn't mention it, but I mentioned it on Monday, I think, or the week before. We've got lots of earnings from Amazon, Apple, Google, Alphabet, etc. So those are we've had Netflix, but we've got all these other ones coming up. So it's all happening next week. So if those numbers aren't great, the Fed kind of keeps its rhetoric about raising rates without really relenting, etc. I don't think this is going to be a break above these moving averages. In fact, we'll see a big push down, perhaps to new lows. As you can see, because we're in a bear trend, the push down has usually been more prolific. So that's why I'm shorting. There's a lot more room to the downside, obviously, but that's the trend. So it's always good to kind of trade in the direction of the trend, even intraday. Generally, you get more for your risk. That's my video. I hope you've got something out of it, and I'll see you in my next. Take care. Bye.